I try to make this a super fan live, but somehow or another, sometimes TikTok doesn't put in the right requirements. So if you can't comment, that's probably because you're not a super fan. If you are able to comment, I don't know how you were able to slip through, but I am answering questions only from my super fans today. This is Super Fan Sunday. So if you have any questions regarding the market, go ahead and put those questions or those stocks in the comment section. And we can keep it moving. So if you don't know who I am, if you're here for the first time, I see a couple of people that are watching from the For You page. My name is Joel Harrison. Now, on Sundays, I do my Superfan Lives, but during the week, I usually go live at 6 o'clock p.m. from 6 p.m. till 8 p.m. And what I do is this is free stock education. So I am a full-time day trader, investor, and trader. I'm an expert in stocks, options, futures, and a little bit of cryptocurrency. And anything that we talk about today are the opinions of Joel Harrison. Now, for this free education, guys, all I ask you guys to help me do is tap that screen. And if you can help me with my daily goal, that's all I ask of you guys, Again, any questions, any concerns that you guys have regarding the market, let me know and I'll be able to answer. I must be doing a very good job because there's no questions coming in. That also means that you guys are getting pretty good, right? You don't really need you might need my insight, but as far as strategy and all of that, you guys seem to be doing really, really well. So my super fans also have free access to the group chat. So if you are part of that group chat be chatting. They be chatting up in the group chat. So if you are a super fan, and I think I have almost 100 super fans, but I only have about 60 to 70 people in that group. So there's 20 or 30 of you guys that are not taking advantage of the group chat. So if you are a super fan, you can go to my profile. If you are a super fan, you can go to my profile. You can go to the bottom of my page, scroll that over. You will see the group. You can add yourself to that particular group. All right, so I'll just do a little bit of education while you guys are coming up with the questions that you want to ask, during this live session. We did cover a lot of stocks last time. We covered from the SPY to, we looked at Google, Meta. Meta's been in the news, so let's go ahead and look at Meta's chart. So looking at Meta's chart, Meta is doing okay. It's just that it's sold off. Like all of these stocks have sold off big time in the past year. The area that rangy area right here. So if you don't see the price is somewhere around the 440 range. If you're able to buy Meta in this 440 range, guys, you're almost getting Meta almost 30 to 40% off. Meta hit a high of $800. And right now we're sitting right around 525. So even though we're sitting at 525 now, which is right around here, I think we get down into this 440 range. All right. I think we go lower now. There's a lot of technicians that are saying we are at a support level, which we are. Right. But we just broke that support. If you notice right here, we've broken that support and we're starting to go a little bit lower. So once you break support, guys, you see how we broke that support. If we spend 2 or 3 more weeks underneath this trend line, look, we're going down to 440. All right, so be careful. We need this week for the market to bounce. We need next week for the market to bounce. So we need the market to really bounce. But there's no reason why the market should bounce. There's just no reason, guys. The market usually goes through the same trend. Usually it'll be up just like it is right now up until April. And everybody knows in March, April, the market will. April is usually a decent month, but that's usually the highs, and then the market falls, and then everybody comes back and buys the market back up in September and October. All right. So that's been the rotation of money over the years. So be careful if you are trading the market. You got to know these cyclical trends. Doesn't mean that it's necessarily going to be that way all the time. It's just that, you know, you always want to know, you always want statistics to be in your favor. And when statistics are in your favor, you can give yourself an edge to make money in this particular market. So that's Meta for those that are interested in buying Meta. If we were looking at options 90 days out, there are, I don't know if you guys can see this, over here on your left, over here that I'm circling, there are unusual, well, I wouldn't even say it's unusual. You have a lot of buying going on at the 1700, at the 530 strike. Even if you were to go out to April, you see 530, you see 540. I don't really see anything unusual. Now, here's something unusual. Y'all see April 17th? There's somebody buying options way out here at the 550 strike. Now, 3,000 isn't enough to really make me really jump on it, right? I want to see like 10,000 or more when you're dealing with these big companies like Meta and Apple and Amazon. But it is telling me that going out into April, we might get a bounce in Meta. So pay close attention to that 550 strike. For those that, now I'm not going to teach it to you right here, but let's say you were interested in taking this 550 strike, right? A lot of people will say, well, Joel, it's going to cost you $1,120. And I say, well, have you ever learned how to do a debit spread? Because if I was to do a debit spread, I can get into that trade just by converting this into a vertical. Now, you want to make sure that you teach yourself how to do this. And if I was to go to the 550 strike now, it's only going to cost me $200. I can still take part in that trade. It's going to cost me, you guys can't see this, so, well, you can see part of it. But your break even's gonna it says max profit. It is gonna give you a max profit. And again, you guys can't see this box. So there is a max profit of 3,200. Even if 180 is how much it would cost for that particular option, with $320 being the max profit that you can make. So I love taking trades like that where I'm going to make at least 50 to 100% return. And a lot of you guys are not doing that. A lot of you guys are still trying to buy these calls straight up. And then you can't, it doesn't budget. The budget for that option to go all the way out to April is 1,120. So what a lot of you guys will do is you'll try to buy out of the money to try to fit that option into your budget, when all you got to do is go up here, turn this single into a vertical, and now I just brought it down from $1,100 to $200. Now, you're not going to be able to capitalize off that option the way that you normally could, right? But, there's going to be a maximum amount that you can make, but at least you're able to take part in that particular option. Every now and then, guys, I'll buy a vertical and I'll buy a call. All right, I'll make sure that the vertical pays me. Like, if I'm in the vertical is going to give you a better break-even price. So, for example, if I was to pick this option, You guys can't see it, but the vertical, it says that my break even is going to be 546.80. But if I was to buy that straight call, so 546.80 would be my break even for that vertical. But if I was to buy it straight up, my break even is 561. So it was 546 with the debit spread, but it's 561 with the straight call. So that's like a $17 difference. Like, that's huge in the options game, right? So a lot of you guys should learn how to do debit spreads. And if you are on the Thinkorswim platform, you're going to be able to get the education for it through the Charles Schwab Free Education Center. All right. But that's debit spreads. Does everyone here know how to do debit spreads? Everybody know how to do debit spreads? If you know how to do debit spreads, put yes in the comment section. If you've ever done a debit spread, put it in the comment section, because you guys should be doing calls and debit spreads just to get an idea of how they work. Interesting. You guys never done debit spreads? Yeah, debit spreads gets the calls down. So for example, let's look at Tesla. Tesla always has very expensive options. And I see a lot of you guys can't trade Tesla because you guys are like, the options are just too high. And I'm like, have you ever done a debit spread? So let's say you think Tesla is going to be bullish from here. And you decide, like right now, Tesla is sitting at $361. All right, let's say Tesla's sitting at $361. Well, earlier it was sitting, Tesla hit a high of 498. All right, now it's sitting. You do credit spreads instead of debit spreads. You like to sell covered calls. I get it. Debit spreads are similar to calls. They're just not gonna. The only difference between debit spreads and calls is that if you're on a platform like Thinkorswim is going to create the debit spread for you. So what you're actually doing, and I don't want you guys to get confused, is you're buying a call and you're selling a put at the same time. But Thinkorswim can create it for you so you don't have to manually do it. So when you get out of it, you have to sell. If you hit create closing order, Thinkorswim will sell the debit spread for you. However, a debit spread is harder to sell call or a regular put. Like a regular call or a regular put, if there's enough volume behind it, over 1,000 contracts, whatever price you see, you should be able to get out. With debit spreads early, like let's say you go, like if you're doing a debit spread and you're only going 7 days out or to Friday expiration, you should be able to get out anytime you want to. But if you go out like 6 months, even if you're profiting, you might not be able to make as much money or be able to get out of that debit spread. So just be careful. Debit spreads are kind of like the tortoise. I always tell people this: debit spreads are the tortoise of the options market. So if you really want your gains to be kind of slow and you're going for a longer period for a little amount, then buy debit spreads. They're the safer option, in my opinion. If you're looking for that fast hair money, rabbit or the hare, you're going to buy straight up calls or straight up puts. All right. So, you said on the app you can manually do it. Yeah, but I just like Thinkorswim to do it. So I'll show you guys another debit spread. So let's say you were interested in buying a call option in Tesla. So when you pull up Tesla's options, let's say you wanted to go all the way out to May. If you were to go all the way out to May 1st, let's do May 8th. No, let's do May 1st, all right? Let's say you wanted to go all the way out to May 1st and you see the at the money strike, which is $360. Here's the difference between credit spreads, debit spreads and calls. If I wanted to buy a straight call on Tesla, when I pull up this box, it's going to tell me that this option, let me change this out. You guys can't see the box anyway. I can, but that's fine. It's going to cost you $2,360. I don't know if you guys can see that there. So if I wanted to buy an option that went all the way out to May the 1st, if I went all the way out to May the 1st, I'm going to pay, dang, I forgot that fast. Hold on. If I went all the way out to May the 1st, I'm going to pay $2,360. $2,360 May the 1st. So I'm going to show you guys the difference, right? So if I was to go all the way out to May the 1st, I'm going to pay $2,360 for a 360 strike, and that option's break even is going to be $383.60. So even though I'm buying an at the money strike, my freaking break even is still, you remember, you got to add the premium plus the strike. So my break even is $383.60. $383.60. So I'm going to show you the difference. That's $383.60. All right, so if I buy an option on Tesla, guys, for anybody that doesn't know what options are, it's gonna cost you $2,360. For $2,360, you're gonna control $36,000 worth of Tesla. For every dollar move that it goes up, you're gonna make $100, right? So let's say Tesla goes from 360 right now all the way to 400. That's a $40 move, right? You can possibly be up $4,000 by May 1st if Tesla, can stay above $400 or more by May the 1st. It's going to cost me $2,360 to do that. So I can make maybe $4,000, and that's only if Tesla goes up, $40. And I only use $2,360. But if Tesla's not higher than $383.60, I'm going to lose every single dollar that you see there, $2,360. Now watch the difference. Watch the difference. Now that's, if Tesla gets to 400, I'm going to make, $4,000, right? $4,000, right? If it goes, I can make, I can make a pretty decent amount of money, right? I'm giving myself all the way to May. Now, we don't know if Tesla's going to do that. If Tesla goes down in price, nothing is set in stone. But let's say you're like, Joel, I can't budget $2,360 in my option plan. Like, that's just too much money. I don't want to enter a Tesla option that high. Well, great. You can go in here. You can say, all right, instead of me buying a single spread, I'm going to buy a debit spread, and it's called a vertical. And now that same 360 strike is going to cost me $300. All right. It says here that the max profit is going to be. It says here that it's actually going to cost me $268. So it's going to cost me $268, and the max profit is $232. So I'm going to show you guys something. $268 and $232. $268 and $232. Now I'm going to spend $268. That's it, $268. But the maximum amount of money, the max that I can make, on this trade is going to be $232. Now watch this. This is different. So now I can enter this trade on Tesla. I'm only going to spend $268 versus $2,360. I'm buying it at the money. But the most I can make is $232. But if I'm going to show you guys the break even is going to be even better. The break even for this trade, instead of it being 383, because Tesla's at 360 right now, the break even for this is going to be, the break even is going to be 362. Guys, that's dang near where we at right now. I just bought the 360 strike. If Tesla is higher than 362, I'm going to make about an 80% return on my money. Some of you guys will take that because instead of me trying to make the most money, most bang for my buck, you can just do a debit spread, hoping that Tesla can go up in value. And if you win, you're going to make almost 100% return, guaranteed, as long as Tesla is higher than 362. Guys, we're right here right now. Basically, if Tesla is higher than this bar that you see on your page by May the 1st, you're gonna make almost an 80% return on whatever you invest. I like those odds. Those odds sometimes are better than it going up in value, because all it has to do, guys, is be a penny higher than that break even. So $362.01. If Tesla closes at 362 or 363, I'm going to make $232, but I would have put up 268. I don't know why you guys are not doing debit spreads. In my opinion, the debit spread is a lot safer. You're not going to make as much money, but you can literally look down and say, all right, this is what my return is going to be, period. You don't have to guess. You don't have to do no guesswork. You don't have to, as long as Tesla is higher than it is, you're basically saying as long as Tesla is higher than it is today by May the 1st, I'm going to either win $232 or I'm going to lose $268. Now, I'm going to be honest with you. I like to take trades that are at least 2 to 1. So I won't take the trade unless my risk, so let's say my risk was $232. Well, my reward has to be $464. So my risk has to be double. I'm sorry. My reward has to be double. I do debit spreads like this all the time, and they're fine with it. They're like, Joel, I'm fine with losing 260. I'm fine with a 1-to-1 ratio. Because if I do this, if I'm catching this, especially when the volatility starts to creep up and we're like at 30, 40, or 50, some people don't have the funds to be able to go 100 days out, but they still want to take part in the trade. They're like, Joel, I don't have 1,000, but I got 300. What can I do with that? And instead of trying to buy way out of the money, you can buy at the money strikes and almost, I don't want to say guarantee yourself, but you're guaranteeing that as long as we're higher than we are today by May the 1st, you're going to be okay. All right. You guys understand? Or did I make it even more complicated? Let me know in the comment section. Yeah, but with the credit spread, you gotta. I don't really like to tell people to do credit spreads unless you already own 100 shares. If you own 100 shares of the company, go about doing whatever you want to do. But when you have the debit spread, you don't necessarily have to have the 100 shares. Yes, Safari, you can always get out of any of your options anytime you want to before the expiration date. Except debit spreads are going to be a little bit more difficult to get out than a regular call or a put. Now, if the expiration is close, more than likely you're going to be able to get out of it. If it's way out, like 12 months, like you're probably not going to be able to get out of it, especially if you buy an out of the money debit spread. So be careful that there's a lot of volume at that strike. But yes, you can get out early. I know people that day trade doing debit spreads because they can't afford. I don't want to say afford. I always use that. They didn't budget. They don't want to budget more than, what that option is. So it's keeping your numbers small. But this allows you guys to take part in any option. You can take part in any stock that you want to. And you can go out 90, 120, 6 months out. And almost, I don't want to say guarantee, but when that volatility index hits 50, a lot of you guys aren't going to have thousands of dollars to put into the options market, right? But you might have 500 here or 200 there. Why not use that 200 or 500, go out 5 or 6 months and either buy, some at the money strikes, calls. But if you can't budget that, buy your debit spreads, and then when you pull up the box, it's going to tell you what the maximum amount you can make. So it'll tell you, as long as you're higher than that certain price, it tells you the value you're going to make. And they don't lie. Like if it closes above that price on that day, you make all of the funds that it tells you can make. Now, as the stock goes up in value, you're going to see debit spreads creep up in price. Whereas you would see calls, like if a stock is up big one day, the call options and the put options are going to be up huge. The debit spreads are going to be up moderately. For example, I'm going to show you guys. Let's look at Friday. Let's look at Friday's options for Tesla. Let's look at I forgot. We're not going to be able to look at Fridays because they're gone. But let's look at April's next Friday's percent return. So if you pull up the percent return, you're going to see something. You're going to see that why is it not here? Hold on. Oh, it's because this is truncated, so you can't really see it. All right, so all right, I think I can remember where it was, so I could take a picture of it. All right, so these are going to be I'm going to take 2 pictures. I'm going to take 2 pictures of Tesla's options, and I'm going to show you how much the regular call put options were, and then I'm going to show you how much the verticals were up, which is wild because the verticals look like they were up more than the dang regular puts. Hold up, let me make sure I can see what you guys see. Let me redo my charts. Okay. All right. So let me pull up. Let me show you guys something. here we go. So the regular put options on Tesla were up. As you can see, they were up pretty big. If you look below my chin, you can see that the 360 strike was up, 66%. Right? And that's going out to like next week, right? And you see how that option costs you like $655, right? Or it's up 66%. So, the day before it was probably $400, right? And then, in one day, well, it's for next week, but in one day it was up, 66%. Now those were the just regular calls and puts. But if you looked at the debit spreads were way cheaper. You see how the debit spreads were only $100, $90, $80? It was almost, you guys can't see it. Hold on. You guys can't see it. Here we go. Look at how much the debit spreads were up. 60%, 150, 21%. But look, it only cost you $115, $130. So the debit spreads were cheaper, and they were dang near paying out the same amount as regular puts were paying out. So you can get yourself in certain options at the money, and you don't have to really go out of the money if you learn how to use debit spreads. Please educate yourself on debit spreads before you guys go out there and blow up your accounts. All right? Before you blow up your accounts. All right? Yes, you can. You already answered that question. But yeah. So yeah, you can do credit spreads, you can do debit spreads, either or. I say do debit. That's going to protect you more, because with the credit spreads, you want to make sure that you have 100 shares. I know a lot of you guys know how to do it without having 100 shares. I'm not going to teach you guys how to do that, because I've seen people blow up their accounts that way. Just do the debit spread. In my opinion, you're still going to be okay. You can either buy the call or buy the put. You can either do just in my opinion, if you don't have 100 shares of that company, I don't think you should be doing credit anything. Just my humble opinion. I've seen too many people blow up their accounts. Right. Just buy regular calls, regular puts. Because if you buy a regular call and you buy a regular put, of whatever you just used can be taken away, right? Once they debit your account, that call and that put, that's the maximum amount you're going to lose. All right. When you start getting into credit spreads, you want to make sure that you have the 100 shares in your account, because if you're wrong, you're going to have to provide the 100 shares. And I've seen people who still to this day owe money to Thinkorswim because they were doing credits instead of doing debits. So just be careful out there, okay? Just be careful, all right? Hey, we're all grown. We can do what we want to do, how we want to do it, but I want to make sure that you guys are protected. Regular calls, regular puts, you can lose 100%. Debit spreads, you're only going to be able to... Debit spreads is also protected. Like once you pay for that debit spread, the most you're going to be able to lose is that debit spread. Once you start getting into credit where they put that money into your account, you better have it covered in case you got to get out. All right. Any other stocks you guys want to look at? That was Tesla. Let's look at Apple. Just like Rihanna saying right now, if you don't have them 100 shares, they're going to be like, bitch, better have my money. Y'all better put them 100 shares in your portfolio. All right, look at Apple, guys. Apple, looking at this week chart, Apple is, we're looking at a slight support area. So if you're thinking about buying Apple, we're at a nice little support area. There is a nice little triple bottom right here. I like this. I hate teaching triple bottoms at the lows, but this isn't really a low. This is a triple bottom after it moved up in price. So it's really a flag pattern that you're looking at. You see the flag pattern? And within that flag, you do want to buy it at the support level. If we break the support level, though, guys, this flag becomes a head and shoulders pattern. It's funny because some of the most bullish patterns will turn into some of the most bearish patterns. That's how the market works. There's always what we call an inflection point. Apple's at an inflection point. If it drops lower than this, guys, it's gonna fall hard. If it doesn't break out of this triangle and go higher, it's gonna be an issue. So Apple needs to go in this direction fast, because if it doesn't hurry up and get through there, people are gonna give up on the stock. If it closes at 240 or 230 for more than a week, Apple is dropping down to 200 easily, down to this lower level way down here. And guys, get this, that's where everybody wants to buy Apple anyway. Everybody wants to buy Apple at the yellow brick road. The yellow brick road is sitting at 200. This is where everybody wants to buy Apple. Nobody wants to buy Apple way up here in the stratosphere. Everybody wants to buy Apple here, and it may give you a chance. So if it doesn't do something, if Trump can't come out, if the administration can't come out and say that this war is over, and we find out we're going to be in this war for another 30 to 60 days, Apple is going to drop to 200. Not only is Apple going to drop to 200, I'm going to show you where all of your favorite companies are going to drop to. Apple's going to drop to 200. Meta is going to drop from 525 to 540. We just looked at that one. It's going to drop to the yellow brick road. Like, we all know where it's going. It's going to the yellow brick road. Amazon. Look, every single one of these charts is telling you, Mr. President, if you don't tell us what's going on with this Iran war, Iran. Do y'all say Iran or Iran? I say Iran, but that's because I'm from Decatur. I'm from Decatur. Like I ran somewhere. But we're going to go down to 167. We're at 199 right now. We're going to 170 if we come out this week before Easter and they say, well, I think we're going to be in this war for another 2 months. Well, you're going to see Amazon go down to 170 from a high of 258. That's where everybody wants it to go anyway. How about Google? Watch it. You're going to see it on every chart. It's going to look, you're going to be like, oh my God, every chart, all the stocks that we're looking at are way above the yellow brick road. Well, look at where Google's going to go to. That is a big old drop if Google drops. Let us be in this war for another 60 days. Google is going to see 165. It's not even about how much money they make, guys, because all of these companies are doing well. If you've listened to any of their earnings call, all of them are saying they're doing extremely well. Like, yes, you know, the business economy is doing, yes, the regular economy is not doing so well. But the business economy is like, the economy can be terrible. That ain't going to stop people from searching. That ain't gonna stop people from going on YouTube. They're like, our business is not affected with you guys losing out on jobs. In fact, when y'all lose jobs, you know what you end up doing? You start searching more, because what you gotta go do? You gotta go search for a new job. Google is like, we are not affected by this. But no one is immune to the whole market coming down. So if we stay at war for another 60 to 90 days, you're going to see Google plummet down here to this 165 area, and it's still going to be bullish. So no matter what you believe in, guys, this is what the charts look like they want to do. Even if it did this, doesn't that chart still look bullish? Even if Google gets down to 165 from 350. Think about that, guys. Google hit a high of 350. If it gets to 165, it will be half the price that it was when it was at 350. Wall Street don't care. Wall Street wants things on sale. That's where Google is going to go to. All right, if we stay in this war. That's what Apple, Amazon, Google. What did we miss out on? We looked at Meta, we looked at Amazon, we didn't look at the dang biggest company on the planet, NVIDIA. Look at how far, this is what's scary. Look at how far NVIDIA is away from the yellow brick road. Guys, it is way. NVIDIA is so far away from the yellow brick road, it's scary. But I wanna let you guys in on something. Last April, just a year ago, and there's nothing wrong with stocks going back to the price that it was a year ago. A year ago, you had a chance to buy NVIDIA for $86 a share. NVIDIA ran from $86 all the way to $212. It ran from 86 to 212. Too tweezy. 212 is significant in Atlanta, because that was 112. My bad, that was 112, not 212. About to give y'all some false information, some fake news. That's a head and shoulders pattern. That is the most bearish pattern you can find in the market. A head and shoulders pattern, which we are exhibiting. And usually it will go down to the neckline, and the neckline is down here at 86. Okay? Now, we did the initial neckline, which is right here. So we are at an inflection point for NVIDIA also, but check this out. NVIDIA has already broken that support. It has already broken that support area. Let me show it to you. If you were to draw a trend line right here, this was the support area. Look at that, guys. We broke it. We broke support. I don't care how much you love NVIDIA, and y'all know I love me some NVIDIA. It is the highest performing stock that I've ever been in. It has broken support right here. Now, it doesn't mean that this is it. It just means that it needs to do something in the next week or two. If it doesn't do anything in the next week or two, Wall Street's going to give up on it, and they're going to wait for it to come in at about $90. I keep telling y'all, this stock can drop 50. This stock can drop 50% from where it is right now. And y'all keep not believing it can happen. I've seen it happen multiple times. This stock can drop from 167 down here to about 90 and still be bullish. Now, if it drops all the way down here, if we drop from 167 all the way to 90, you're going to see a 43% drop. That means its market cap is going to drop from 4 trillion to about 2.5 trillion, which is still stupid, right? 2.5 trillion, guys. Do y'all know Nvidia can drop to 2.5 trillion and it'll still be the 4th largest company on the planet? The largest company on the planet is Nvidia. It is sitting at 4 trillion. It's sitting at $4 trillion in market cap. That's a trilly, guys. You make your money from this number growing, and you make your money from this value growing, or, and you lose money when this value goes down. If this goes from 4 trillion to 8 trillion, your $167 is going to go to 320. Anybody thinking that they're about to get rich off of Nvidia, you missed out on the move. It's the largest company on the planet. You missed it. You need to find companies that are smaller that can grow to 4 trillion. You missed it. You're not going to get rich off of Nvidia. Sorry. You missed it. You're not going to get rich off of Apple. Not in the next 5 or 10 years. Apple has a $3.6 trillion market cap, guys. It's damn near big as Nvidia. Don't let the $240 fool you. This is the 2nd largest company on the planet. You are not about to get rich off Apple. You missed it. You had 20 years to invest in Apple and you chose not to. Those days are over. It's 3.6 trillion now. In order for you to even make 10 times your money, you need this to go to 30 trillion. That ain't happening no time soon. You missed it. You need to find something that's smaller that can grow to 3 trillion. If you're buying Google, you missed out on getting rich off Google. You had 20 years to buy it. 20. Yeah, 20 years to buy Google. Now you want to buy Google. Now you want to get in. I want to buy Google now. Well, you missed out on it. It's now a $3.3 trillion company. You make your money on the ballooning of these companies, not because they're making money now. That's the biggest mistake you investors make. You think because they're the largest companies on the planet, you can still get rich off of it. You can get rich off of it if you buy options. You're not getting rich off of Google buying the stock. Even if you invest $100,000 in Google today, the chances of that $100,000 being worth $1 million in the next 5 years is it's just not gonna happen. I can invest $100,000 in Google today, and in 5 years, it's not gonna be worth $1 million. You missed out on making money in Google. Now, it doesn't mean that I can't make 20%. It doesn't mean that when it drops, can't get in, and that $100,000 can be worth $200,000. But from where we are right now, and I see a lot of you guys loading up on Google with hundreds of thousands of dollars. And I'm like, you realize it ain't going to turn into $1 million to another 15 years. You missed it. You missed out on the days where $1,000 turned into $1 million. But it doesn't mean you missed out on it in the stock market. You just missed out on it in Google. There's multiple companies you guys can buy and make. It can make you something in the future. You guys just got to learn how to look at the market cap. You guys are looking at the wrong numbers. And that's why we're here to educate ourselves so we don't make the same mistake a lot of these uneducated investors are doing. Microsoft is already at the yellow brick road. The days of making millions off of Microsoft with thousands of dollars, guys, you had 35 years to invest in Microsoft. You had 35 years, and now y'all want to buy Microsoft? I think I'm ready to buy Microsoft now, Joel. You missed it. Microsoft's a $2.6 trillion company. You missed out on it. You missed it. Sorry. I'm sorry to be the bearer of bad news. Your Microsoft investment is not about to make you a millionaire unless you got $200,000 invested in it right now. And most of you guys don't have that type of capital invested in Microsoft. So I understand why a lot of you guys think I need a lot of money to make a lot of money. No, you don't. It's just that you guys are buying the wrong companies trying to get rich. You can't get rich off of Microsoft after it ran for 30 years. You got to find new companies that are small that can grow to $1 trillion or $2 trillion in market cap. But if you've never looked up the market cap, how you going to know what to look for? That's why we're here. That's why we're here. All right. Microsoft is sitting at the yellow brick road. You remember how I told you guys this is where the one percenters love to buy? If you're thinking about buying Microsoft, guys, this is probably the time to do it. You see how all the other charts hasn't gotten to the yellow brick road yet? Microsoft is there. So that's why I tell everybody the best chart that I've seen so far, even in this downturn, is probably Microsoft. Because even if Microsoft drops to this lower level, which is 312, even if you buy Microsoft here at 356, I think I can stomach another 10% drop in Microsoft. I think I can. Now, last April, guys, Microsoft was at 312. Microsoft is one of the closest companies that's near the price that it was last year during the April tariff lows. So if you guys want to know what I'm looking at, this is what I'm looking at. I'm looking at Microsoft with an eagle eye. I'm like, ooh, yellow brick road. I looked at last April's lows. I'm like, ooh, thank you, G7, the one and only, for that. I appreciate that. The DJ glasses. Thank you very much. Title gifter. Go ahead and pin you on up there. Microsoft looks like a buy. So, Joel, why are you still buying Microsoft? Well, I'm buying Microsoft. I'm not thinking about making 10 times my money. I'm now at the stage where if I can buy it here and Microsoft goes from 356 to maybe $700, I make 100% return. So I'm not looking to gain 10 times my money, but I am thinking about making double my money. If I can't make 10 times my money, I'm going to invest in a way to make double my money. Double my money or 10 times. But I need to buy something that's on sale so much that if it ever goes back to its all-time highs, I know I'm going to get close to 100% return. This chart. Oh, Lord. I don't know what I just did. Let's do that again. Microsoft hit a high of 555. Woo! Please, no photos. All right. What you think I trade for the Pusha F and RAV4? Hold up. We're at 355. And up top, two bee stings, and I'm beasting on the Riesling. All right. So let's say Microsoft goes from 355 all the way up to 555. I'm going to make a 50% return. 50. I love that. If I buy that in options, I'm going to make a killing. So, my first response is that if we can get from where we are now, and somehow or another we get back to 555, I'm not expecting that 50% return very quickly. It might be 2 years. That means I can average about 25% on my money, right? So if I invest 100 grand in Microsoft, instead of me expecting that 100 grand to go to $1 million, I'm looking at it like I'm flipping property. All right, I'll throw 100 grand in Microsoft. It goes up in 12 months, 25%. Imagine if you bought a house for 100 grand and then you flipped it for 125 6 months later. That's how I'm looking at Microsoft. I'm looking at it like a home flipper. I'm flipping stock. Right? So I'm going to try to flip this, but it better be some money available in it in order for me to flip it. I'm not going to buy it at the all-time highs. The worst flippers on the planet, guys, real estate-wise, are the people that come into the game and they're buying property at the highest price, at the highest appraisal level. I'm like, where are you going to get your profits from? And most homeowners or most people that flip for the first time, they just think because of how much money they put in the house, they're going to be able to get it out. And I'm like, that's not how it works. That's not how it works. You want to try to get that house as low as you can under that appraisal amount, get your renovations in, and then that appraisal amount should be your maximum that you think you can make. And if you can make more than that, that's gravy on top. That's the same thing when you guys are doing this. When I'm flipping stock, 555 is like what I'm not even entering this trade if I don't think it can get to 555. But what usually happens, guys, is I'll buy it somewhere down here at 355, and then you get something like this. Watch this. Let's say you bought it at let's say the first time you bought it here, you saw an all-time high at 347. And then you said, ooh, I'm going to buy it at the Yellow Brick Road because that's what Joel teaches. And then sometimes you get lucky, guys. You get lucky sometimes, guys. And not only does it go from that area 220 to 347, because this was also a 50% return from here to here, guys, was a 58% return. So in my mind, I was going to be happy with a 58% return the last time it hit the Yellow Brick Road. But guess what? Because I'm an expert investor and I'm an expert trader, sometimes you just get lucky and the bad boy just keeps going higher. And not only did it hit 58%, it went all the way up here to 555. And guess what I just did? If I just bought it down here at 240. Remember, I bought it down here at 240. And I was going to be happy. I was going to be satisfied with a 50% return. I was going to be happy with a 50% return. Happy, ecstatic. It's like selling it for 150. I'm gonna be happy with that. But then you get lucky, and then that 240 goes all the way to 480. Look at where it reversed, guys. It reversed at 480. You know why it reversed at 480? Because of 1%ers like myself. We know where to get out, 100% return. Then it dropped, and then it got up there again, and then it went all the way up to 555. You had a $240 investment that went to 555. Remember, how long was I giving myself to make that 50% return? I was giving myself 2 years. But because because I have a strategy and I decided that I was going to use it, and I'm looking at my worst case scenarios, instead of that 240 doubling, remember, I was looking for a double in maybe, 2 years, 3 years. I was good with 30% return a year. So I was like 3 years down the line, it's 2023 or or 2020. Well, that was 2000. Well, that was 2022, 2023. Right around 2026, I should be doubling my money. Well, you got out a little earlier. 1 year later, you would have doubled your money. Well, shoot. My timeline was 3 years and I got my money in 1 year? I'm doing it. Right? Then it ends up going all the way to 555, which was almost a 200% return. So the amount of time that you were already expecting to be in that stock, remember, you only wanted a 50% return in 3 years, and you end up getting 130% return in what year? What time frame is this? 223. You end up getting 150% return in 3 years. All right, it's all about numbers, right? It's all about numbers. So when you're approaching the market, you should have realistic expectations when you're buying. We looked at, that was Microsoft. We looked at Amazon. If you're thinking about getting rich by investing in Amazon, because it's only $200 a share. Okay, it's $200 a share. But it's a $2.1 trillion company. You missed out on getting rich off Amazon. You've been watching Amazon for 15 years. Now you want to get in? You could have been making money for 15 years. 10 years ago, 2016. You've been looking at Amazon since 2016. In 2016, Amazon was $23 a share. You didn't want to buy it then. I don't know, Joe, $23. You know, they keep saying that there's a bubble and there's other companies that's going to take Amazon over, and then you were listening to the wrong people. And Amazon ran from $23. 10 years later, it's sitting at $200. It went from $20 to $200. And you missed out on it. It went from $20 to $200, and you missed out on it. Guys, that's just like $100,000 going to $1 million. How long did it take for Amazon, the company that everybody was watching, to grow 10 times its value? It took 10 years. And now you want to get into it? Now, in order for you to make 10 times your money, Amazon has to go from $2 trillion to $20 trillion. See, back when Amazon was $20 a share, Amazon was only $200 billion in size. Y'all know the companies right now that are $200 billion in size? I'm going to give you guys a couple of companies. Alibaba, 292,000 in size. $160 billion in size. All right. One of my favorite companies. You guys are like, why is Joel buying Arista Networks? I'm buying Arista Networks because it's $150 billion in size. If it ever got to $1 trillion, I'm going to make 10 times my money. You guys are going to hear about Arista 10 years from now. Then you're going to try to buy it, thinking you're going to make 10 times your money like Joel did. It's not going to happen. Because when you get into it, they're probably going to do a reverse stock split. They're going to make their stock look like the same price it was 10 years ago, because that's what they do. Then you're going to buy it wondering, why am I not making 10 times my money? Joel did it. Why am I not doing it? Because you haven't educated yourself on market cap. You gotta know what the market caps are in order to figure out how much money you can make. When companies are already $4 trillion in size, you missed it. When companies are 100 billion in size, you still got a chance. You still got a chance. You should have a long list of companies that are 100 billion or less in size. That's what you should be going in on. Why? Because we have companies right now that are trillions in size. When these companies finally reach a trillion, the bigger companies hopefully have gotten to 15, maybe 20 trillion. Maybe. All right? There's levels to this game. The California, New York, and Florida market, real estate market, is what brings up real estate across the world. Did y'all know that? California, New York, and Florida is where real estate agents look to see where prices can go. Because once investors are used to paying $100 million for a condo, the first $100 million, y'all remember the first $100 million house that was sold? Now you're probably going to see $1 billion houses sold. You have to break certain ceilings first. Once you break that ceiling, investors are comfortable for taking it even higher. When I first started doing real estate, I tell people this all the time back in 2003, 2004. You guys are not going to believe this story. In 2003, 2004, when I first started doing real estate, and I didn't have any sales and I didn't have but time to go online and look at statistics, I would go on, we have this thing called FMLS. Most of you guys have seen MLS. They got Georgia MLS. They got FMLS. I would go on Georgia MLS and FMLS every single day and look for the highest price house in Georgia that's listed. And you can do that. You can go in there and just put a parameter in there. Just say, I'm looking for a house that's $3 million or higher. Do y'all know in 2003, there were no homes in Georgia that was over $2 million in size? And that was back in 2003. There were no homes that were over $2 million in size. In price. 2 million. 2 million, guys. That was just 20 years ago. No houses in Georgia was going for over 2 million. And at the time, the Braves were doing well. They had these big $1 million contracts, but there was no $2 million homes. And then everybody started moving to Georgia. And now there's 20, 30. I even saw a $50 million listing in Georgia. 25 times higher than it was in 2003. Once you break a resistance area, investors are willing to pay more. So that's why I say, we might see a $20 trillion company. I might be totally wrong. You might be able to put $100,000 in NVIDIA today and that $100,000 be worth $1 million in 5 years. I don't see it, but anything can happen. The lowest market cap should be $1 billion. Arwen, the lowest market cap should be $1 billion. Wall Street, pension funds, mutual funds, they do not care for anything less than $1 billion. Anything less than $1 billion is considered a penny stock. And if it's a penny stock and if it's on pink sheets, it's not going to be regulated the way that the SEC looks at the market. Guys are people that just want to lose money. If you want to lose money, go buy penny stocks. Because big money, real money that's making these companies go up, companies like NVIDIA, they want to make sure that the companies that they're buying are legitimate companies that has a legitimate business. It doesn't mean that the company is not legitimate. I know the company my wife's working for is a legitimate business. It's not worth $1 billion yet, but their job is to try to get legitimacy by making the business grow. And then as the business grows, if it can get to that $1 billion, it's going to open up the doors to other investors. So that's always the first goal for most companies, at least nowadays. It might not have been that way 10 or 15 years ago, but nowadays the goal is $1 billion. If you can get to $1 billion, you get to ring that register on the New York Stock Exchange for your company to go public. And then if your company does really, really well, you get added to these indexes. Once you're added to these indexes like the S&P 500 and the Russell 2000, you're almost guaranteed funding, because when money comes in from these 401 pension plans, they have to place your money in these indexes. Well, do y'all know that these indexes, that some of these pension funds and mutual funds, they're forced to buy a certain amount of shares. Like if they're part of a certain index, they gotta buy every single company in the Russell 2000 or every single company in the S&P 500. It doesn't have to be the same amount of money, but some funds has to go towards that company even if you don't believe in it, because it's a requirement. These are things that you guys just don't know about. So that's why it's very important that when you guys are looking at companies that you want to invest in and make money in over the years, make sure that it's part of like the S&P and the Russell 2000 or the Dow or the NASDAQ first in the beginning, as you guys are getting your feet wet. Then you can start looking for stocks like quantum stocks are not going to be on anybody's radar, right? But don't go into those speculative companies until you guys are really good at what you're doing. Don't start there, because if you start there, you're not. That's why a lot of you guys don't know about market cap, because you came into the stock market. The very first thing you went out and bought was cryptocurrency and companies like Reddit and quantum stocks, and you never learn the fundamentals of the market. Then when you lost all your money, you blame the New York Stock Exchange for why you lost money, not realizing you're buying speculative companies, and that's what they do. You have an idea, your company becomes public, they see how investors take to it, and then the best of the best survive. There's 20 quantum stocks that came out. That's just how things happen. But what happens is y'all be listening to people tell you horror stories, so you don't want to be in the market. Oh, I remember what happened back in the dot-com era. Okay. Amazon came out of the dot-com era. Netflix came out of the dot-com era. Like, all of these great companies that you see today that has made people millions of dollars came out of these periods that you guys are scared of. That's what happens in business. In business, a whole bunch of companies are going to come out. The best are going to survive. Your job is to pick the ones that are the best. The easiest way to figure out which ones are the best are the ones that's got the most money. So if I'm looking for cybersecurity companies, I'm going to go on my chat GPT and say, can you give me a list of the top 20 cybersecurity companies in market cap? I'm not looking at anything less than that. If you're into e-commerce, give me a list of the top 20 e-commerce companies that are out there. I'm not looking at anything less than that. Even if you're into something speculative like cannabis stocks, y'all don't even know what the largest. I've seen some of you guys that's been in the cannabis space for 4 years. Y'all can't even tell me what the largest cannabis company is in that sector. And I'm like, how can you be an expert and you don't even know the biggest company in that sector? You're not really as an expert as you think you are. All right, because you gotta know who the big dog is, because that's the one that's getting all the money. That's the one that's pushing that market cap. And if it's pushing that market cap, it gives you an idea of what your company could be worth if it does the same thing or better. I'm looking up cybersecurity companies. The first thing I think about is Palo Alto and CrowdStrike. When I'm thinking of cannabis stocks, I'm thinking of Green Thumb and Curaleaf, like right off the back. And then if I'm thinking of the biggest Canadian one, I'm thinking of, Canopy Growth maybe, right? If I'm thinking of the biggest real estate cannabis company, I'm thinking IIPR, right? If I'm thinking the biggest e-commerce company in America, I'm going to think Amazon. Then I'm going to list all the other ones that are similar. I'm going to list Amazon, Shopify, eBay. If I'm looking up social media companies, and it's interesting, guys, a lot of you guys don't even know how big of a difference Facebook is than Snap. And it's so easy. And it's so easy. You just pull up the information and say, how big is Meta? Oh, Meta's $1 trillion in market cap. How big is Snap? Snap is like 10 billion in size. Snap is not even in the conversation with Meta anymore. That's how large Meta is. It can buy Snap 100 times over. It's not a threat, and it hasn't been a threat for years. But when I hear investors come into the market, they always be talking about how Snap, they better watch out for Snap. And I'm like, are you serious right now? Facebook is 100 times bigger than Snap. They ain't even thinking about that company no more. You obviously don't know how big Meta is in comparison to Snap. You guys got to look for that stuff, guys. You got to look for that stuff, all right? You said, what's the name of the site? Well, most states have a MLS. Most states have a multiple listing server. It's just an MLS, a multiple listing server. Most of you guys just use Zillow anyway, right? Zillow, guys, I'm a real estate agent and I use Zillow more than I use freaking Realtor.com or my own MLS. It's interesting because MLS is where we would go to, but Zillow has become so user-friendly. Even agents, when I'm out and about, I'm pulling up Zillow before I go to my own multiple listing server, and it sucks. But I think things are going to change with artificial intelligence coming into play now. It's going to help a lot of these businesses that's been lagging over the years get a lot better. All right. What were we looking at? I was looking at Arista Networks. So Arista Networks. Today's keywords of the day are market cap, and what did we talk about earlier? Market cap is one of the keywords of the day, and debit spreads. We're talking about market caps, and debit spreads. That's the key word today, guys. Market caps and debit spreads. The two things have nothing in common, but that's what we're talking about today. All right. If you don't know the market cap of your company, that's what you're going to do today. You're going to take a list of all of your companies, including your cryptocurrency, including your crypto. And we're going to start looking at how big they actually are, because that's where you make your money. For example, if we were looking up Solana, I saw somebody in the comment section say, can you please look at Solana? Great. I'm not even going to do this. I want you guys to do it. Somebody in the comment section, can you please tell me what is the market cap of Solana? Is it a baby cryptocurrency? Is it an adolescent? Or is it an adult? Does it have room to grow? What is the market cap of Solana? And while you guys are doing that, I'm going to pull up a different chart. This is Solana, guys. If you wanted to look up any company and you want to find all the information about that company, you can use this free page, Yahoo Finance, and you can pull up all the information you need for free. This is the 1 year chart for Solana. If you bought Solana 1 year ago, you'll be down 36%. It's in a bear market. If you bought Solana 5 years ago, Yes, guys, I own. I said own. I sold all of my crypto in January. Paid taxes on my profits. Used those funds to take care of my Christmas bill. And I'm supposed to be investing in it again, and I haven't been doing it because I don't believe that crypto is about to go up. I've been following crypto since 2018, and I've been right every year. Every single solitary year since my inception, I've been right about crypto. I don't see it going higher because there's no catalyst for it to go higher. Why should crypto go higher? Why should crypto be going up during a war? Now, here are some reasons. Well, Joel, if other countries want to purchase military arms on the black market, they're going to use crypto. Yeah, that's a decent explanation of why you might get activity in it. But did you go and you look at the activity of crypto right now? It's not going up. The activity is going down. So that opinion is null and void. There's no activity happening. You want to see increased activity in crypto. That usually makes it go up in value. You want to have a catalyst for crypto to go up. There is no halving in anything. Nothing is halving this year. No halving. No activity. Investors are scared. Crypto also goes up when people feel good about their money. No one feels great about their money right now. In fact, everybody's holding, they're holding their funds because we don't know what's going on with the war. Our 401ks are lower. So a lot of us are really focused on our investing. We ain't thinking about no crypto. Y'all thinking about crypto because that's the only thing y'all know how to buy. You got to talk to people that actually buys all the assets like me. I buy everything. So I can tell you there's no reason to be buying it. Now, if you're buying it to invest in it because 3, 4, 5 years down the line, you see it going higher, then buy now. Now, crypto is more than 50 to 60% down from their highs, so you should be buying it now. Anyone expecting it to do anything this year, you're in denial. Stop being in denial. Stop being in denial. If you're going to buy it, expect it to go lower and say it with your chest. I'm buying crypto. It's gonna double or triple this year. It makes no sense. Like, why would it triple? I would be the dumbest investor on the planet to buy crypto right now, expecting it to triple this year. When everybody and their mama know we in a war, and no institutions is buying, and the activity levels are going down. Like, get out of here with that crap. Guys, stop using your opinions to buy stuff and go out there and find the real statistics. Quit buying and praying. Joel, I needed to go up because I got bills to pay. So I'm going to come in your room and I'm just going to give my opinions on why I think it should go higher. Okay, I'll buy it with you. Just come with some statistics. Show me something. Joel, there's big institutional buying in crypto right now. Look at this chart. I have an indicator that's showing institutional buying. They're buying it like crazy. I've looked up that indicator. There is no institutional buying. In fact, it's going lower. But y'all don't want to hear that. No, Joe, don't tell me my crypto's going. Guys, that's a good thing. Buy more. You just can't expect it to do you can't expect anything to do it. Guys, this year is a nil year. Investments, don't even expect anything to do anything this year. That's gonna allow you to at least approach the market better. Don't expect your Nvidia to go up. Don't expect your Apple, your Amazon, your Microsoft, your Google, your quantum stocks, your crypto, your gold, your silver, your house. But I'm gonna tell you what probably is going up: oil. You can't have any expectations you're gonna approach the market correctly. Now, I'm gonna be honest with you guys. I am expecting things to go up big next year. I've been telling you guys this since January the 1st. Since January the 1st, I said, guys, this is probably going to be a down year. For you new investors, you're gonna probably unfollow me because you're gonna buy things for the first time, and for a whole year, you might not make any money. But here's the statistics behind it. For every bear market we get, a bear market is when the market goes down in value. For every 1 year that we get that's bad, we get 4 years that's good. For every 1 year that's bad, we get 4 years that's good. So treat this year as a educational year. This is the time to get educated. This is the year that you should be loading up on some of your favorite companies. Because a lot of you guys are going to come in next year saying, all right, I'm ready to do this. And the market might creep up or it might blast off by, I don't know, November or December. And then you're going to say, well, I can't buy it at highs because I was taught not to buy things at highs. And it's just going to slowly keep going higher. The next thing you know, 3 years is going to go by. Then the market is finally going to flatten out and you're going to feel like it's on sale. Not realizing that for 3 years we've been going straight up. If this is a bad year, I'm going to tell you guys something. If history repeats itself, and it does it all the time, the second year of a president's term, historically, if you don't believe me, go to your Chat GPT and ask it. Go right to Perplexity, go right to your Gemini, go right to your Chat GPT and ask it. Out of all of the 4 years that a president is in office, what year is usually the worst year? Unanimously, every single one of your GPTs is going to say year 2. Well, guess what? This is year 2. Then it's going to say, historically, what is the best year historically from a president's term? It's going to say year 3. Because usually after you have a real bad year, it's followed by a big up year. And then it's going to tell you that usually the last year is always an up year because the president and that administration at that particular time want to make sure that the market is in a good place before they leave office. That's historically been the pattern. Historically. So there are some catalysts that's going to make the market go up next year. The big, beautiful bill, we haven't used a penny of those funds. You don't have to like the president. You ain't got to like the administration. But that's real money that's about to flow into the market. And if your industry is part of that industry, you're going to get money. And that money usually rolls and finds its way into the stock market somehow. Just like when you guys got them PPL loans. Remember what the market was? The market was at lows. Then the government said, we're going to print money for everybody sitting at home with no jobs. Y'all know what y'all did with that money? You invested it. A lot of you guys used it in the stock market. I did extremely well during that period because you guys were using those funds to get educated. I was in the right place sometimes you just get lucky. I was in the right place at the right time. One of the few educators that were online that already had digital products and was already doing one-on-one consultations before COVID. So I just so happened to be at the right place at the right time. Been there, done that. And that money found its way into the market. That's why the market exploded market exploded 2020, 2021, 2022. Then the market went down in 2022. That's the 1 year. Then the market exploded in 2023, 2024, 2025. Now we're in year 4, 2026. For every 1 year, we get 4 years that go up. Well, we at the end of that 4 years now. Let this be a down year. We're probably going to have another 3, at least the last 2 years. That money's going to come into the market. The Iranian war might be solved by then. In 2027, 2028, if I'm correct. If you follow the cycles, it doesn't mean that it's going to be 100%. Nothing is 100%. Right? But if you see certain things happening, that's how you predict stuff when you're like, okay, the third year is supposed to be an up year anyway. All this money is supposed to come in by the end of the year. Okay. It's more than likely going to come in when the market is at its lows. Because that's just what makes sense. Why would the money come in while we're at our all-time highs? That's not how investors think. Investors like to buy low, sell high. So let's push the market down. Let's hurry up, go into war. Let the market do what it's going to do. Let this money come in, and then let these rich folks get even richer again. That's how I see it. Because I'm one of those one percenters. I think like they think. And if I'm telling you guys, I wouldn't even buy the market here. Why would you think the billionaires would? You ain't no billionaire. Quit saying you like them. I know how they think. And I actually invest better than they do. They can't even catch the lows the way I catch it. They're too big. But that's what I see. All right, you can follow my lead. We're not here to follow Joel's lead. I'm just telling you guys how I think and how I view the market. I've been correct a lot. But I like to back the statistics with the charts. I will change with the charts. Guys, in 2022, I didn't believe the market was going down. I didn't believe the market was going down in 2022. Let's pull up that chart. I don't care what people think. I let the charts tell me when I should get out. I'm gonna show you guys what was happening in my mind. Because when you make money for a very long time, you just don't believe that it can turn around. This is how the market looked. There was no reason for me to get out the market. This is what the market was doing. This is 2021. Oh, you guys can't see. So hold on. Let me pull it up so you guys can see. I'm going to show you guys. You don't have to try to get in front of it. You can just wait until... That's not it. There you go. So this is the S&P 500. I'm going to show you guys something. You didn't have to try to get in front of it. Like this. I'm going to show you guys the dates. This is the beginning of January. This is January 2021. All right, so I'm going to show you guys. This is January 2021 right here. This is January. So everything after this, 2022 started right here. Okay, so this is 2022. 2022 was a bear market. Now, this is what was happening all through 2021. I'm like, all through 2021, everybody's telling me the market's oversold, from January. Now, they was wrong for 12 months. Your boy from The Big Short, this cat the whole entire year was saying, the market's gonna fall, and it might be just as bad as freaking 2008, because all of these PPL loans that was created is gonna bring the whole market down. You just can't give everybody money and the market just stabilize, right? So the market went up. I told everybody, I'm not getting out of none of my stocks until the market tells me to get out. So January came, and this is what happened. In January, guys, in the middle, the very first Fed meeting, the Fed said, we are going to raise interest rates. We're going to raise interest rates. So then when they said that we were going to raise interest rates, guys, the market fell. Now, that didn't mean that I still needed to get out the market. I drew a trend line, and I kept telling all the people that was watching me, we need to break this trend, because when we fell, we were in this period. I had to decide in this time frame, do I get out of the things that are in my portfolio, or do I stay in? Because remember, this trend line held since 2020. So So this line, guys, this was money made all the way from 2020 all the way to 2022. That's 2 years of making money. Interest rates said, Powell came out and said, we're going to raise interest rates. And I was like, raise interest rates? And I'm going to be honest with you guys. I never lived during a period where they rose interest rates. My whole life, they've been dropping interest rates. Well, not my whole life. My whole investing and trading life. So I'm going to be honest with you guys. There were other traders and investors that came into the room and they were like, Joel, I'm older than you. I'm older than you, Joel. You need to listen to me. I'm older than you. I came from a period where I saw what happens when interest rates rise. When interest rates rise, the market goes down every time. I was in denial. And I was like, well, I ain't getting out unless the charts tell me to get out. So I was very stubborn. So then we broke this trend. So for 3 months, I stayed in the market. We rallied. And this is when I decided that they were right and I was wrong. We rallied in March, guys, all the way up until we broke this trend. I told everybody, if we can stay above this trend line right here for 3 weeks, I said, I will get out of the market. I will get out with you guys. Or not get out the market, but I'm going to sell a lot of the positions that I have. That's why you guys have not seen. What you guys don't know is that back in March 2020, I bought a lot of Apple, a lot of Amazon, a lot of Google, a lot of Facebook, a lot of Nvidia, a lot of Tesla. I bought a lot of those companies. In April of 2022, when we broke back to the downside, I got out of most of my companies on this date right here. This date right here was April 25th, 2022. I got out of everything. All right. Except my Nvidia, because I was like, I am not losing out on this percentage because one day I'm going to be doing TikTok lives and I got to be able to slap my Trump card down, not Donald Trump. I'm going to slap my Trump card down and I'm going to say, have you ever gotten a 3,000% return? So I'm not selling my Nvidia, but I sold everything else and I waited. And I waited and I waited and I waited and I waited and I waited. And look at what happened. When I got out then, remember, I was stubborn. I was like, I'm not getting out until the market tells me to get out. I ain't listening to y'all thousandaires. Get out of here. You know how much money I made up until now? And you telling me to get out? I ain't getting out. I ain't getting out. I ain't getting out. So I was willing for the market to come in. The market came in and the market gave us a push to the upside and it failed. It failed. And then they kept saying they were going to raise interest rates again. At this time, guys, there is no AI. There is no ChatGPT. There is no Perplexity. There is no Gemini. There's none of this. This is 2022. I know you guys feel like it's been with us forever. We still just had regular Google search. So now I'm going on all of my Google searches looking up, hey, what happens when the Fed start, raising interest rates? And at that time, I had to go to 20 different sites. Then I had to make sure that that site was legitimate because y'all remember back then we had all of this fake news on all of these different places. I had friends giving me information. Then I'll look at the bottom and it's some Asian company that created the post. And I was like, dude, this isn't even legitimate, but they live by it. So I'm so happy GPTs came out. I didn't have any of that, right? So I don't have any of that, right? So I don't really. So then, April 2022, I got out of just about everything. Look at how much money I saved myself, even though I was stubborn. We ended up going all the way down here, guys, to the yellow brick road. And when we got to the yellow brick road, y'all know what I did? I entered all of my stocks back right down here in October of 2022, and I got a bunch of receipts to prove it. When we finally got down here to the yellow brick road, because I had been teaching this strategy for over a decade, I had saved myself. Guys, y'all know how much money I saved? I'm going to show you how much money I saved. The S&P dropped. When I got out the market, the S&P still dropped another 17%. Y'all hear what I just said? The S&P dropped another 17% from where I got out. 17. We're only down 8% now. It dropped 17 from where I got out, and I was losing money at the time. And then I sat back, bought the market back at the yellow brick road. And from there, we ain't seen it since. You know why? Because it was the end of a bear market, and then the market ran for 2023, for 2024, 2025. So I don't care what y'all tell me about the market. I can get out as late as I want to. And I'm still telling you guys, I ain't getting out of the market till the market tells me. I don't give a dang about you, your mama, Uncle Al. I don't care. When the market tells me to get out, I will get out. Now, here's what's crazy. The market's not giving you a chance. It's not doing that extra push back up. So I'm like, yo, is this bad boy just going to just keep going down? Is it just going to keep going down? I needed to break this trend. So this is the same setup that y'all just saw that I was in. Remember how I wasn't afraid of the market? And I was like, yo, I don't care. We're going to see a bounce. This next bounce that we get, we call it a dead cat bounce. We're going to get a bounce, guys. It might last a week or two. If we don't break this trend line, I'm telling you guys right now, if we don't break this trend line right here and the market stay bullish for at least 3 weeks, you're going to see the same thing that happened in 2022. And we're going to fall all the way down to the yellow brick road. I know I can tell a story, but there's statistics that back my story. There's statistics that back my story. Don't y'all see how this is the same setup that happened back in 2022? History repeats itself all the time. But if you don't know how to go back and look at history, how can you even see what the market even actually did? Or how to position yourself? Or if you were wrong, how wrong could you have been before you actually lost everything? The market gave you months to get your money out of the market. A lot of you guys think that it's a 1-day event or a 2-day event or a 3-day event. It's not. It's like 7 or 8 months. When I got out the market, that was in April. The market kept falling in May. It kept falling in June, July, August, September, October, November. It fell for 7 months. And then it finally got to an area where whoever was going to sell sold. People like myself, the 1%ers, we're looking at this yellow brick road. We're like, all right, that's an area that we probably want to buy it. Where you guys go wrong is you're drawing your own support levels and your own resistance areas as if Wall Street is looking at your chart. They're not looking at your chart. This is what everybody's using. Everybody, remember guys, trend lines and support lines are subjective. That means humans can draw any type of line that we want to. But what is something that we all can see with our own eyes? It's going to be moving averages. That's why moving averages always trumps any support line or any resistance lines that you guys draw. Everyone knows where the 200-week moving average is because you can just pull up a chart and you're going to see the value. Everyone knows where the 200-day moving average is because all you got to do is going to be on every single solitary investor or trader that trades the market. We all see this line here at 661.63. If we don't break this to the upside, and look guys, this bad boy been going straight down. It's not even giving you a chance to bounce back. That's what's scary. But remember what happened back in 2022. We didn't get a bounce until April. Y'all remember what I said? Let's go back to April. Let's go all the way back because you guys got to look at history. If you go back to 2022, the last time we had a bear market, the market fell from January to March, just like we doing just now. It's the same exact pattern. Is this right? Oh, I'm looking at the wrong chart. Hold on. Let me pull up the right chart. And I got to get out of here in 9 minutes. Same thing happened in 2022. The market started to sell off. It started to sell off in January. Well, guess what's happening now? The market started selling off in January. This was January. It didn't finish. It didn't catch a low. Whoa, hold on. It caught a low February 2000. It caught a low on what low is this? This is February 221. So we bottomed at 221 and we rallied for about 1, 2, 3, 4, 5 weeks. We rallied for about a month. It felt great, but we didn't break this trend. This trend line that was in place, that was it. Once this trend line was in place, you would have been able to draw this trend line before any of that happened. So what you guys should be doing is drawing a trend line, extend that line, and that's the key. If we can't break above that line and stay there for 3 or 4 weeks, and that means going up or sideways, we went up, spiked up, and then turned around. We couldn't even spend 14 days above this line before it started to drop back in price. It started to turn around, guys, March the 28th. Y'all know what date it is? What's today's date? That was March the 28th. And then it started to go down in value. And I got out a little late. When it started to go red, that was April the 25th. This looks like the same exact pattern. It looked like the same exact pattern. Look, guys, this is January the 26th. We started to go down in value. It's now March the 28th. Well, 23rd. We need the market to jump. If it jumps, we need it to stay up for 3 weeks. If it does not stay up for 3 weeks, I'm letting you guys know firsthand, we are probably going to be in a bear market. So yeah, the next month is going to be very, very scary because it's going to determine what this market is going to do. Because if we enter this bear market, it's going to go down for the whole entire year. All right. Oh, yes, you guys can. All right. So I just want you guys to know I ain't trying to be the bearer of bad news. I am just a chartist. I'm a technician. And I'm not out yet. I am 100% invested in the stock market right now. If you want to know, I am 100% invested at this time. But see, I know that we're still early. Because look at how far away we are from this yellow line. I want to make sure that I'm not getting out when we get down here. See, this is what y'all do. We get down here, then you get out. Well, that's the reversal area. I'm not going to wait till we hit the yellow brick road. I'm trying to get out before the yellow brick road. But guys, there's nothing in the charts telling you that it's time yet. All right. You could say, well, Joel, I'm getting out because I saw these 3 reds and I just feel like we in a war. I'm getting out. Even if you got out right now, guys, this is actually statistically the best time to get out. The best time to get out because you know how you felt. You're literally taking in information from the best people out there with information. You're giving the administration a chance to explain themselves with this war. You're looking at the statistics from a charting standpoint. All of your technicians are saying the same thing. Your technicians are saying, look, if you want to know, we broke a trend. We broke a trend that had been going up since April of last year. We've broken that trend, guys. Like, if you can't see that we've broken this trend, you're in denial. We have broken the trend. So that's not even a question. Has the trend been broken? Yes. Are we about to form a new trend, or are we about to sell off and then form a new trend? Well, we have that two pieces of information, but this is still not enough information yet to tell you to sell everything in your portfolio. We can easily, I'm not even lying to you guys. Trump can come out with some information on Monday, and this market can be up 2,000 points, 3,000 points in 3 days. Literally go back to the all-time highs. And then we reset, and then you need another 3 or 4 months to get the market to turn over again. I can see that playing out. That's why Trump kept coming out on these Thursdays and Fridays trying to hold the market up. If you guys have been watching, they have been strategically saying things about the market because they're trying to prop it up, because technicians like myself, they know that we're looking at this because we're educated now. We're not just going off of information. We got information, and now we know how to look at charts. We just as smart as they are. If we can't break this trend back to the upside, Wall Street's going to give up on the market because it's early in the year. Wall Street can be like, yo, we about to sell everything. It's April. We got until December to make money. We good. In fact, yeah, we good. And then if they raise interest rates, we'll start buying then because we got the whole year to make money. And guess what? Every stock is off 20, 30% anyway. It's not like these stocks are going to be up 30% in one day. So we can sit back and chill because we the ones that move the market. Ain't nobody taking NVIDIA back to its all-time highs in 1 week. Now, the S&P might go to its all-time highs. But individual stocks, nah, we good because you got earnings that's about to come into play also. So this is how I'm looking at the market. This is how you guys should be. I'm not saying you should be viewing it this way, but this is just from my perspective. I go back, I look at history and see what happened the last time this major events like this occurred. And then I try to see if it matches what's happening today. Then you got to go back and see how you positioned yourself at that time. If you missed out on the market, then you guys should be the first to be looking at charts and asking yourself, why did I miss the market? Why did I miss the April lows? Why was it so easy for Joel and his group to get in, but it was so hard for me to understand when to get in? Probably because you don't know how to read a chart, or you haven't been looking at the volatility index. All right. So you guys got to make sure that you understand what the best of the best that are, taking this information in, what are they looking at? What are the things, when you hear somebody like, look, I like the guy from The Big Short. The only thing I hate about him is that he can't trade. He is probably the worst trader I've seen in the last 10 years. He caught the move of the market going down, and I give him all the props for creating, I always forget the name of the paper of the credit default swaps. I tell people all the time, he is a genius for creating, credit default swaps. And that's how he was able to make so much money when the market fell. But he is one of the worst traders I've ever seen because he tries to trade off. He gets information, but just because the information is there doesn't necessarily mean the market's going to do it right then and there. But you guys don't understand that. Like in time, maybe 5-10 years from now, guys, you know how much money you can make in the next 5 to 10 years? Money you can make in the next 5 to 10 years? You can 10 times over before the market actually falls. But when you listen to cats like that, they make you think that the market's about to turn over tomorrow. And that's not how the house of cards work. The house of cards has to build itself to the point that it finally topples over. The market is not ready to topple over yet, especially since we haven't. Guys, AI is real. Every single company around you is about to implement artificial intelligence, robotics. This stuff is happening. And it's going to happen probably for the next 4, 5, 6 years. Then you might get a bubble. But it ain't happening next year or this year, which is what you keep hearing all of these naysayers say. Guys, I've lived through a lot of these different periods. You got to understand what to look for and how to do. You'll see the market toppling over in the charts, and you would have been out of the market by time that happens. And then if the market goes to the 200-week moving average and we can't bounce from there, then you can start saying to yourself, oh, the bubble might be happening. But even when you hear about the bubble, guys, it's not even as bad as you think it's going to be. It's probably going to be just as bad as it was in April of last year when the market sold off. Y'all survived that. So you hear doomsday scenarios, but you don't understand how that's going to affect you and the stocks that you're in. That's the problem, because a lot of the times, okay, it might make your stock drop 50%. Maybe your portfolio drops for 50% for 1 year. But then they never tell you what happens after a bubble. After a bubble, markets usually run for like 15 years. Y'all don't ever hear those stats. You always hear the bubble might come. So for 15 years, you don't invest because you think a bubble's going to happen for that 1 year. And then when it finally happens, you don't buy the market and then make money for the next 15 years. So the market's rigged to go up. It was created to create the most millionaires ever, and it's always been that way, and it's done that. So you can either look at it one way or you can look at it another. All right. But if you're not learning how to look up charts and take the information and the charts, then that's why a lot of you guys are struggling as traders and investors. All right, y'all know I'm gonna keep ranting and going on if you guys ain't asking questions or putting stocks in the comment section. So I'm gonna go ahead and get on out of here. Thank you guys for the support. Monday through Fridays, I go live from 6 p.m. to 8 p.m. Eastern Standard Time. At 8 p.m., it's for my day traders. Anybody that ever wanted to learn how to intraday trade, we're going to trade the futures market. The futures market is just like buying stock. All right, I teach you guys how to do it for free as well. No use in taking these $30,000 classes anymore. Anybody taking classes that cost more than $5,000, you're getting duped. All right, there's so much information out there, guys. Look, even going to ChatGPT, this is what I want you guys to do. If you're thinking about taking a course, if you're thinking about taking a class, put that individual in the ChatGPT. Let GPT tell you about the individual that you're about to take the course for. Then take a picture of what that person is saying that they're going to teach you, and then I want you guys to put that in your ChatGPT and ask, is this a fair price? ChatGPT is going to say, for what they're offering you, it's going to break down even if the class or what they're offering you is even worth it. So, if you've ever bought anything from me, digital products, this, that, and the other, one-on-one consultations, do the same thing with me. And I promise you, ChatGPT is going to be like, yo, that's a fair value for what he's offering to you, which is why I don't try to beat you guys over the head with stuff that I know that you guys can go out there and find on your own. All right, my best-selling product is going to always be my Thinkorswim platform. What is it? It's this thing that you guys are looking at here. If you want to read charts and be able to look up charts, and you've never looked at Thinkorswim ever, you can't go on Thinkorswim right now, and Thinkorswim can help you make your charts look like mine. The only way that you can make your charts look like Joel is by Joel telling you what he did to make his charts look the way that it is. All right, some of you guys are going to be like, well, Joel, you're putting out products too. Well, look, I feel like I got some of the best charts on the planet, right? I can read my charts. I'm using trending indicators. 50 $50 to make your charts look like mine, then this ain't the business for you. And that's cheap. This cat's out here charging y'all 10 grand. $50? That's how much it costs for a round of golf. Or if you were like, hey, Joel, I just want to pick your brain. Can I take you out to lunch, bro? For 2 hours, I just need to pick your brain and ask you about some stock stuff. Cool. $50. Get your charts right. It's there for you. I'm only one person. I can't be there and help every single one of you. But you guys can help yourself, and then you're able to follow along with what we're doing, all right? But I got to get out of here. If you are a super fan, if you're not a super fan, you can always go up here to the heart. Grab that heart, become a super fan. Even if you're not a super fan, grab the heart me, all right? That helps me on TikTok. I'm trying to make this the best. It's already the best educational room on this platform. It's just that everybody don't know about it yet. I've only been on this platform for 4 months. Yes, guys, this is my 4th month. I've been on this platform for 4 months. I'm trying to make this the best educational room on the planet. On TikTok, we are here to learn. I'm not here to sell you guys anything. We are here to learn. Anytime that you come to my lives, you're going to learn something. We're going to learn about a stock. We're going to learn about the support resistance areas. We're going to learn about the market cap. We're going to see if it's an investment that we want to take, maybe something we don't want to take. I'm going to show you guys how I day trade from 8 to 8:30 every day. So Monday through Thursdays, I go live. Well, here's the thing. I go live every day. Monday, I go live every day. The weekends are going to be pop-ups. Sundays are huge. Sundays doesn't have a set schedule, but it's for my super fans, so that's why a lot of you guys can't comment. All right, so super fans are going to get their super fans on, this is called Super Fan Sunday. Saturdays, I might go live, I might not. You guys will know by Friday. Monday through Friday, though, you can guarantee that I'm going to go live every day from 6 p.m. to at least 8 p.m. Monday through Thursday, though, after the 6 to 8 session, we go straight into day trading, and that's for my day traders. Because a lot of the times, most of you guys that are in the room, you're investors and traders. We don't have too many intraday traders. So I do an intraday trading live session from 8 to 8:30 where I go live with real money. Let's see if we can make money. Let's see if we can lose money. Watch how I lose. Watch how I win. That's Monday through Thursday. The only reason why we don't do it on Friday is because the futures market is open 23 hours a day, 6 days a week, and it closes at 6 o'clock on Friday, and then it doesn't reopen until Sunday. So that's why we can't do live trading on Fridays. All right, so I'm going to go ahead and get on out of here. I will see you guys tomorrow.